want the combination of a perfect chart, the market has turned, and they've got big earnings, and they're a leader in their particular industry. So what I'm trying to get across is that you've got to have rules for when is a market making a bottom and you're having a follow-through day. You've got to have buy rules plus sell rules on the general market, and then you've got to know how to read charts so that you will recognize there is a perfect base on Chipotle's. If you don't believe in charts, or you haven't used it, or you feel uncomfortable with it, anybody can learn how to do it. There are 9 basic chart patterns, and they're repeated cycle after cycle after cycle. There's nothing new in the market. They're made by the institutional buying, accumulating a stock over 8 or 10 or 12-week period. Sometimes it's 6 months, but you've got to learn to recognize that pattern. And we've come up with many stocks just by recognizing the pattern in and around these market bottoms. After you recognize the pattern, now you go and find out what do they do, what do they make. You read a story on it. You run a checklist out on the website. How much are their earnings up? Well, you find out this company has earnings up 30, 40% quarter after quarter after quarter, and they've got a huge return on equity, and all the other measurements that are fundamental are critical. You want the combination of a perfect chart, the market has turned, and they've got big earnings, and they're a leader in their particular industry. So you put all those little pieces together, and what this means to you is you got to get serious about the market. You can't just work at it some and think you're going to get it down. You've got to learn how to read charts. You've got to learn how to make sure you've got the best fundamentals, how to really evaluate a stock properly. Forget the PE ratio. That is not a sound way to select stocks. We know some of the top money managers in the country that have been at it for years, and they understand this. They don't care whether it's 20 times or 50 times. They assume the market knows what it's doing. What they want to know is this company got a leading product that's gaining share of market, and they have a big return on equity and big sales and big earnings, and they're not going to argue with the marketplace. So you'll find sometimes that it may be a low PE, it may be a mid-PE or a high PE. If you happen to have the opinion that that's one of the key ways you select stocks, you aren't going to perform with the very biggest and best of them. Now, I've gone through some of the moves that show up right at this critical point. Our studies go over 27 cycles all the way back to 1880, and the biggest leaders come out in the first 3 weeks, coming right off the bottom when everybody is unsure, they're afraid, and they're licking their wounds. So we're showing you how the market in reality actually works, not how most people think it works or how they would like for it to work or what they believe in. So you can't go by opinions. You got to go by facts and the market.